What's up? I'm Dan Fredenberg, and this is another Chance Encounter. Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house. It's going to be torn down soon. I understand that there are power lines that are getting kind of close. What's up again? This is Dan Fredenberg, and that there is a commercial real estate building. I'm joined today with Deb Pritchard. How you doing today, Deb?
I'm doing very well, Dan. Thanks for having me.
Excellent. It's my pleasure. And I got to let you know, Deb, my very favorite audience member is watching today. How cool is that? And why is my favorite audience member watching today? Well, it's because this is a chance encounter where I interview commercial real estate syndicators, investors, operators, and all that kind of rigmarole. And why do I do that? Well, part of it is because it's the law. If you want to share private deals with each other, you have to have a prior substantive relationship, which means you need to know, does this person know what they're doing? What exactly are they looking for? What are their core competencies? What's their tolerance for risk and all that kind of fun stuff? But before we get too excited and dive deep into those, Deb, do you want to introduce yourself to the audience real quick?
Yeah, my name is Deborah Pritchard, and I've been investing in the multifamily real estate space since 2008. We couldn't get any leverage way back then, so we put partnerships together, to buy apartments for cash.
Hmm.
So I also am a partner at a CPA firm, and we do a lot of syndication tax returns. So I've seen the good, the bad, and the ugly.
All right. Yeah, sound like a real asset to any group. But the first thing I want to do is I want to say, but wait, check your eight. Deb, I don't know if you want to play on my stupid jokes, but one thing I like to point out is under here on your 8 o'clock, maybe you can see if the audience's subscribe button is red or if it's blue. It's your five. It's not your eight there in the audience. But anyway, jokes aside, that's not that important. The thing I want to talk about is the distinct motivations I've found between
Mhm.
and amongst commercial real estate investors. So the first distinct motivation I found, some people are making their next acquisition because they're preserving their purchasing power. What's that all about? It means they have a balance sheet, they have a bunch of assets that are cash flowing, and they use that cash flow to make ends meet. But if there's an asset crash or if there's a lot of inflation, they're going to have to make new acquisitions using their current assets as collateral and make these new acquisitions. So that's what some people are up to. That's not me. I'm not doing that one right now. My big one is trading time directly for wealth. I also call it deployed equity. The background for that is I've got a background in technology. Specifically, I've owned a CRM agency for online shopping carts and whatnot since 2011, and that's actually what ended up getting me into real estate. Because once I found out that, hey, wait a second, I'm paying more in tax than any other type of professional because I'm getting it in the form of wages or salary, so it makes more sense to figure out how to pivot and then get compensated in the form of equity. So that's what I'm doing. But a lot of people get into commercial real estate because they want to trade, they want to take control over their calendar and their schedule a bit more. Maybe that means fast tracking to retirement. Maybe it means they want to work fewer months per year or fewer weeks per month or fewer hours per week, but that's what they're up to. But that's actually not everybody. I fairly frequently run into people who are so ambitious, they want to buy their entire hometown. They want that legacy wealth. They want to make sure that their great grandchildren never have to hold down a day job. So they're going to be hustling into their 90s. So it's a different type of personality. And there's a little bit of overlap with this last group. So some people, they've found a sector of society, or maybe it's the environment, or maybe it's animals. But regardless of what it is, they've realized that you have to have a substantial financial nest egg to really make a big impact. So that's why they're making these acquisitions. So of those five different motivations, Deb, what
Mhm.
combination of those jumped out to you and describes you best?
Well, the last one and the fast track retirement.
Beautiful. I love it.
Those would be the two for us, for
Okay.
me.
Do you have a group in particular for like a
Um,
pet project
well, I
or?
mean, the fast track retirement, I mean, we look at, as I said, we've been doing this since 2008. When I look at our, real estate portfolio versus my 401k and, we've got some RRSPs up in Canada. I mean, it is just blown by those 401ks and the RRSP. I mean, it just, I feel like we wouldn't be able to retire had we not gotten into real estate back in 2008, because
Mhm,
just because of the ups and downs of the market. And
mhm,
I'm nearer the retirement age than I don't have the time value of money anymore.
mhm, mhm, mhm.
um, and helping people who need it. Everybody needs a home to live in. And if I can if I can purchase an apartment building, make it the best place to live, and give these people a decent place, I feel like they'll pay their rent. Well, we can help them any way we can, because everybody needs a place to live.
Very true, very true. And yeah, I definitely see what you mean. Okay, my screen's going crazy here. I definitely see what you mean about the 401k or
Mm,
RRSP, just simply because it's like, well, you're trying to tell me that those huge buildings don't pay for themselves? So it's
yeah.
shocking, right?
Yeah, the fees on those things have outweighed the actual gains, income the
Hmm.
last, couple of years.
Yep.
So,
Yep. Makes lots of sense.
yeah.
So my next question then, it has to do with tolerance for risk. This was
Mm,
inspired by the common SEC's no action letter for Citizen VC.
mhm.
I didn't like how they asked about, what's your tolerance for risk? Are you highly aggressive or what? So I put it in this context. Could you please fill in this blank? There are many popular investment asset classes, but I think blank is too risky. What do you think, Deb?
I'm going to say NFTs is
Hmm.
too risky.
Hmm. Yep. So anything in particular about that you want to expand on, or just
Well, I don't know enough about it, and I don't feel that the people that are actually getting into it know enough about it. Have a friend that just spent $10,000 on something, and when I asked him what he really got, he couldn't really explain, and I'm like, okay.
yeah.
So it's one of the newest fads, and everybody wants to get in, in the beginning, but I don't know. I feel like a lot of these people are going to lose money in the beginning.
Right, right. And at the end of the day, that's why so many people stick to real estate. So
Yes.
let's go through this. Just so you know, if you are admiring this wonderful Dan Does Deals commercial
Uh-huh.
roll die, you can go to dandoesdeals.com and print out your own copy. And like a dummy, I don't even ask for your email address.
Hmm.
From a marketing perspective, that's the worst thing you can possibly do. You should always ask for contact information in return for your
Right.
freebies. But I don't do that because I want you in the camera there. I want you to be able to effectively communicate on the subject of commercial real estate. And I
Hmm.
also want you to understand how my guest fits in it. So I go through these 6 roles in each one of these chance encounters. So let's rock and roll and do that. The first role I want to talk about is the repositioner. There we go. The
Hmm.
repositioner looks at a bunch of different properties and does a bunch of paperwork. What are
Hmm.
they doing with all that paperwork? Well, there's a fancy word for it. They underwrite it first. What does that
Right.
mean? It means they're doing the math. They're finding out, hey, is this broker slash seller even telling the truth about how much this property is making right now?
Hmm.
You have to know this. But why are they really doing the underwriting? Well, real estate is super duper competitive. So, what they're looking for is upside. They're looking for ways that they can reposition the property so that it's
Hmm.
making more than it is right now. Now, they have three tools in their tool belt for finding upside. The first one is more advantageous lending from different financiers. Okay, yeah, cool. My glare was going crazy there.
Hmm.
So, financiers are people like banks who only deal with paper and money and they don't
Right.
get their hands dirty. Okay, so let's assume that for the repositioner in question, that's not on the table. The first thing they're going to rely on is the operations team, and they're
Hmm.
going to stop those Benjamins from going down the toilet here. But there's more to
Right.
operations than just unclogging toilets and collecting rent and taking out
Hmm.
trash and mowing lawns. There's also a marketing part, which is one of my fortes, and that's to
Hmm.
keep the vacancy rate low. But of course, my technological background helps me automate a bunch of systems and make SOPs and blah, 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 blah.
Right.
But operations for the most part is probably not going to be enough to really find enough upside. So frequently people will get a contractor team to do a value add, aka
Hmm.
renovations, and then that way the units are nicer and the new tenants will be happy to pay more than the previous ones.
Hmm.
But if the repositioner has the same problem that I have, which is I'm from the internet, I'm actually from Canada and in Canada, but
Hmm.
it's the same thing. And so the problem I have is I need a local. I need somebody who lives
Hmm.
nearby who can be there in an hour or so because I'd still be stuck at the airport in an hour. So if that's your GP team right there, and you
Mm-hmm.
turn, the repositioner turns around to the financiers and says, "Hey, I need tens of millions of dollars to buy this building that's worth tens of millions of dollars." You don't happen to have, say, tens of millions of dollars you can lend me, do you? Well, the
Mm-hmm.
financier is going to want to know about one other person who I haven't mentioned that, and that is the sponsor KP. Now,
Mm-hmm.
some coaching systems and programs, they kind of gloss over this one, but what it's all about is for you to be eligible for a commercial loan, somebody in the fold has to already own a similar asset, or else they're just not going to give you the loan. On top of that, you need a certain amount of liquidity, and then
Mm-hmm.
through the owners, the GP team, you need a balance sheet of at least the amount of the loan. But if you have all those pieces, you've got yourself a commercial real estate deal. So, Deb, you've got extensive experience in the accounting and whatnot. So I'm sure you're good for repositioners. But where do you see yourself on that die right now?
Really, on that, I'd have to say more on the underwriting,
Hmm.
on yeah, because as the financier, just because the numbers are my thing,
Hmm.
and raising, yeah. So it would be on the underwriting, looking for the upside in the deal.
Hmm.
How aggressive can we be on rents? Putting in a water program, is that going to reduce looking at reducing utilities, some of the big major expenses we have stuff. So yeah, that would be where I would fit in.
All right, beautiful, beautiful. And then as far as the best type of deal goes, when commercial investors are talking to each other and they say, "Hey,
Mhm.
what's your buy box?" or "What's your ideal property?" What they're really asking for is three things. First one's
Mhm.
geography. So where is it? Which states? Which counties? Which
Mhm.
neighborhoods? Okay, location, location, location. Right. So that's the
Mhm.
first thing they're going to want to know. Second one is going to be the size of the deal. So we're talking about multifamily for the most part, which is
Mhm.
where we use unit count as the main way of deciding the size. If you're doing other forms of commercial like industrial, it might be square footage, but different people are going to be taking down different sizes of deals. So the size is absolutely vital. Then the third one is the one that I hate because it's class and they use the same word for two different things. The first meaning of the word class has to do with the condition of the building. So is it
Mhm.
old or is it brand new? Is it
Mhm.
up to date or is it, like a little bit behind the times? Is it beat up
Right.
or is it immaculate and luxurious? So the other meaning of class, though, it has to do with the neighborhood that the property is
Mhm.
located in. So we're talking about what's the crime rate like? How are the school districts in that area? And both of those versions of class, they use the same system as grade school, like A
Yes.
plus, A minus, B plus, C, and
Mhm.
so on, to figure out what it is. So, Deb, as far as properties that are easier for you to say yes to and more difficult for you to say no to, what you looking for?
Okay, I've got to say, I've got to preface that with that it's changed over time.
Mhm.
When I first got into this, I was looking for C class because, even as time, even as the market was going down, our A class would move to Bs, Bs would move to Cs, and unfortunately, Cs would have to move up to Ds. But C was always occupied
Mhm.
until the pandemic.
Right.
And then the pandemic, the C class got beaten up. Those were our wage, those were all of our people that got laid off, didn't have jobs, but our A and B class could still pay their rent.
Mhm.
So the market has changed for me. I'd really have to look at the deal because so it's anywhere between an A and a C, and I prefer boots on the ground, because as you said, I want somebody there that I trust and know who's running the property because I can't trust a property management company.
Right.
So if it's me, because I mean, Texas has been. I live in Texas. It's been traditionally too expensive recently to buy. So we've looked at places like Georgia, Atlanta.
Mhm.
We've looked in Tennessee. We've looked in Colorado. So long as I can travel to those places, just show up unannounced on a regular basis, because I do live in the US, but I could still be stuck at the airport for an hour, delayed or canceled. Um, I would look at those areas, but if you can be if you can be in the same city as the apartment building you're buying and running, that's the best scenario.
Mhm. Mhm. I love it.
Absolutely the best scenario.
All right, awesome. So you already alluded a little bit to my next question, which is I just want to preface it by saying that because commercial real estate is multifaceted, you've got these
Mhm,
different swim lanes here. People are so supportive and they're always
mhm,
eager to help build more teams. But at the same
mhm,
time, we're all better suited to help some people more than others. Me
mhm,
personally, because of my marketing and digital background, it's the sponsors and KPs that I
mhm,
always want to know more of because they've already got a foundation where I can be fuel to the fire.
mhm.
Whereas when you're first starting, you need grunts who are willing to work like 120 hours a week and whatnot.
Right.
Now, Deb, you were mentioning looking for the local. I'm not sure if there's anybody else who you're looking for. And if you have any 506B deals, you're not allowed to entice investors. So if you have a donut on
Right.
your table, don't wave it in front
Yeah.
of the camera, right?
Yeah, and actually, I don't actually. I'm actually retiring from my CPA firm to become this full time because up until this point, I've just been paying, six figures in tax, looking at all my real estate people and wondering, thinking like I'm a smart person. Why haven't I? Why didn't I change? Why didn't I stop doing this a long time ago and get into the game?
Hmm.
So I don't actually have any deals. I'm going to join a syndication group out of Houston, and
Hmm. Hmm.
um,
Good
we'll
stuff.
go from there.
Good
So,
stuff. So, all right, and so you're looking for locals. I guess you do need more KP sponsors
mhm,
in your network then as
yes,
well,
yeah.
right? Right. Okay,
Hmm.
cool. And then we ended up meeting through some mutual friends. I ended
Hmm.
up I was there because of it was a Zoom meetup, but
Hmm.
LinkedIn is one of the best ways to reach me. I don't know if there's a website that's better for you or one of these social media
It's,
services. How do people catch you?
yeah. I mean, right now it's going to be LinkedIn.
Hmm.
I'm moving away from the CPA firm. So yeah, I'm going to start, I've never had time to actually get onto social media. So I'm hoping to have more time to do that. So, LinkedIn would be the best place to get me. Hmm.
Excellent, excellent. I love it. And yeah, 2 years ago, I was basically in the same boat, just like going like, okay, well, being a CTO of a real estate firm, it's not enough. You need a lot of people knowing who you are to really
Yeah,
make all this stuff work. So I
yeah.
really appreciate that. But the only
Yeah.
thing I have left then is it's actually not for you, Deb. It's for you, which is that if you, I just want to let you know if you were looking around during this interview and then you're just like, my eye, like you have this searing pain in
Mhm.
your eyeballs. It's probably because there's a red subscribe button right there. It's brutal, and like kids make fun of you, like, oh my god, you didn't subscribe, like for real. Oh,
Uh-huh.
whew. But all jokes aside, it's totally free to hit the subscribe button. All it means is that my videos might show up on your list of suggestions, but the more
Mhm.
important thing is that YouTube might actually start paying for these videos instead of me. So that's why I
Okay.
keep on telling you to do it. And I
Mhm.
appreciate the fact that you spent this time with me, just like Deb. I
Mhm.
appreciate the fact that we got together and got to know a bit
Mhm.
about each other. Thanks for joining.
Absolutely.
Awesome.
Um,
Make sure you 506B me. Any syndicators, make sure you 506B me. Oh, hey, yeah, here's my code. You got your QR code scanner? Okay, yeah, oh yeah, just hold it right in the square there. Okay, cool. And now you hit open in browser.
Okay.
Okay, are you already logged into 506BME?
Yes.
Yeah, okay, cool. Yeah, so there's my video. So now I'm already on your watch list. So when you get back to your hotel, you can find out what my core competencies are and my level of sophistication. Sound good?
Yeah.
I love your hat. Real estate's a scam. That's really funny.
Yeah.
Nice meeting you.
You too.
506B me, everybody.